Welcome to TheoTRADE. This is Don Kaufman. October 18th, 2023. Just about 21 minutes left inside of the trading session here on this Wednesday afternoon. Spoos are off to the tune of about 55 handles right now. So I know a lot of people are going to focus extensively on what is some sell side activity today. But obviously, we're at like a geopolitical crossroads, and risk is really kind of permeating through into big tech. And we're going to look at that in a moment. But there's actually quite a bit that's catching my attention in this marketplace. And let me just, cut right to it. Look, I get it, right? Markets are down 1.3%. Let's not even make a big deal about that right now. And I'll tell you exactly why. If you cruise over to the SPX, right? So we're in the SPX right now, and you look at this central line. This is the expected moves that I draw every week. And of course, I cover them like in pretty much every single video that I do. I'm talking about expected moves. And one of the things that really resonates with me is, all right, put away your, the bearishness and set it aside for just a second. And, I can get all kinds of bared up. Look, I'm in bearish positions. But the point that I wanted to make is, right off the bat, we're almost unchanged on the week, okay? So, what's unique about that? And as I was saying, like this geopolitical crossroads that we're presently at, before I go and start to break down individual sectors, again, to cut right to the chase, look at volatility. So I'm not a big proponent of VIX, but it's really interesting, insightful, and incredibly dangerous where VIX is presently trading. It has nothing to do, look, you could look at the VIX chart all day long and you're gonna be like, what's he talking about? What I'm talking about is where VIX is, okay, relative to where the S&Ps are presently trading. We're not just gonna look at VIX, we're gonna look at a lot of the volatility indicators here. So VIX is actually right up to, let's just call it 20, just round it to 20. And compare that to the S&Ps, because the last time that the VIX was really rocking, the S&Ps were down at 4250. The S&Ps right now are 100 handles higher, but volatility is actually, it looks like it's going to close higher than it did in any of those trading sessions. So, well, the point that I'm trying to make, again, as I said, to kind of cut to the chase, markets right now are considerably higher than they were again, just back, like 2 weeks ago or so. And if you look at the S&Ps, and let's get really specific here, I'm looking back at October, again, October 4th. That's the day where my my mouse is presently on. Cruise over to like October 4th, inside of VIX land over here, and there was kind of a big reaction, and then volatility basically abated. There was a big reaction, volatility abated, and that's geopolitical, action over here. Right now, though, yeah, keep your helmet on because we're really priming for a very, very substantial move in markets. And that's why I kind of entitling, tonight's video, this, geopolitical crossroads. And something I mentioned on the weekend update is that if risk is coming to this marketplace, which evidently it is, it's going to bleed through specific to tech. You can talk all you want about energy. Energy is interesting right now as well, obviously, because it is in the middle of a geopolitical storm, right? So energy is interesting, but at this point, it's something that I don't even really want to deal with as a trader, because it's, you can't predict what's about to happen here. And even if you had news, you wouldn't even know how to trade it. So it's kind of the odd sector out. And again, I'm not looking specifically at oil. I'm actually talking about the XLE right now. The interesting aspect of the energy sector is obviously energy got caught off guard like the last 2 weeks, but the expected move kind of expanded out a little bit, and it's holding the upper edge, again, the upper edge of its expected move. Meanwhile, if you take a look at the financials today, they're taking a pretty considerable hit. Specific to like Morgan Stanley. Morgan Stanley had earnings and it's on almost a 2 sigma move. It was supposed to move about $3 after earnings. It's getting smacked right now. It's off the lows. It actually had a full-blown 2 sigma move, maybe bouncing just very, very mildly. But again, the financials themselves, to take a look at them, you're like, oh, they're getting hammered here. They're down like 1.7%, which is actually a greater loss than the S&Ps, and it's a greater loss than even Nasdaq. But bear with this thought for a second. Go to auto expected moves, and you put on expected moves over there, and the financials basically unchanged on the week as well, which brings me once again to tech. And this is where you better pay attention, because tech right now, when it comes to expected moves, which to me is a very impartial way to kind of measure like one sector versus another sector, on a week to week basis. And what I want you to see inside of tech, compare tech over to the financials, and tech's actually taking a larger hit. Tech's taking a larger hit than the S&Ps are. And that's why I'm telling you, pay attention, because we have been Johnny on the spot with this one. If they're going to come for this marketplace in a big way, they're coming for tech. Better remember that. The risk is going to be felt. It's going to permeate through tech. Clearly, everybody's talking about Nvidia. I mean, they're talking about Nvidia for the right reasons, right? There's news about it. They might not be able to sell their chips, yada, yada, yada. Nvidia turned around, though, and said that, look, it's like the material impact of not being able to sell chips, specific chips, to China and now many other countries. There was no material impact in the most recent quarter. Market didn't even listen to it, so they just whatever, and they're definitely beating up Nvidia. I'm going to make this point, and I've made it time and again. And I'm going to make it one more time. This thing has yet to actually be hit. Okay, I want you to remember that I froze the screen. I don't care. There's 15 minutes left. I don't care that we're diving right now inside of the S&Ps. Okay, only thing that matters is that you remember that Nvidia hasn't really been hit. You look at Microsoft. Okay, Microsoft hasn't really been hit, right? Let's actually cruise around to Meta. Oh yeah, just basically hitting some recent highs. I have to pull up 3 and 5 year charts to see higher highs. But the point I want to make is, you're less than 4 or 5 days from some of the recent highs. Yes, it's taking a hit today, but remember something: unscathed. Tech is still relatively unscathed. Sure, you can make an argument about Apple. It's well off its recent highs. Yeah, by what? 15, 20 bucks? It's pretty nominal. Pretty nominal. Then we look at Google. Is what? Again, 3, 4 days removed from some of the recent highs. Okay? Tech is still relatively unscathed. You don't feel that way about the financials. You have to discount what's going on right now inside of energy. Okay, Geo has got its claws right now into energy, so you have to discount that a little bit. All right, let's move on, because I wanted you to see, first and foremost, that market volatility is actually saying, like, look, the situation is coming to a head. Don't read just VIX. And again, we're going to go deeper right now. Don't read just VIX, because again, if we closed right here, which we're going to in just about 15 minutes, this is the highest closing volatility that we've seen as of late, right? Which ultimately says, hey, look, this is the most serious situation that markets have been in. And the irony of that is markets have been much lower, but this is the most serious situation that we've been in. And that's what I want you to be able to read out of this. Moreover, let's look at volatility futures. Now, volatility futures, they have actually gone flat, and they're starting to flip into what we term backwardation. And this implies, okay, that things become an utter and complete free-for-all. The NOV volatility futures, once again, are starting, okay, to exceed the DEES volatility futures. That's when things get crazy. I'm just gonna, break it down for you, because hedging activity for like proprietary trading firms and volatility arbitrage firms, it changes when we actually flip from a contango into a backwardation. And that if this November volatility continues to go up, and I just want to point out, look, I just froze the screen, and okay, a moment ago we were in backwardation like barely by 5 cents. It's already picked up now. Now it's 7 cents, and okay, then it's 10 cents. It's going to get crazy. The second you go into some like type of backwardation like that, though, what happens is firms start to sell S&P futures. to mitigate exposure of a hit that they may be taking in short no volatility futures. In effect, what I'm saying is there's firms, okay, let me just water that one down. There's firms selling this crap right here. They're selling the no volatility futures, and often they turn around and buy like DEES because there's a natural progression in there where NOV, if you will, decays off a little faster than, for instance, DEES, like a calendar spread, but it is a calendar spread like in a volatility futures contract. Well, what happens when this NOV all of a sudden starts to take off to the upside? Those trading firms will they'll use S&P futures, and they'll start to sell S&P futures to mitigate some of that downside exposure. Moreover, okay, look at VVIX. Okay, VVIX is going to Never Never Land. This right here, people, pay attention. It's the most serious situation markets have been in. Okay, it's not about what you think at this point. Obviously, we all know that geopolitical risks are really starting to permeate the entire marketplace. But don't kid yourself. Don't look for like obvious. It's going to come out of tech because it has to be the unscathed sector. You can't just sell things indiscriminately. You got to sell what's going to be the largest market capitalization out there. Because if the S&Ps, if you come in and just sell S&Ps, well, I'm sorry, okay, then you have to sell Apple. And you go, well, why? Okay, statistical arbitrage. You can't just have S&Ps moving down, all right, without the stuff in the basket, okay, moving with it. And that's one of the things that it needs to resonate with you right now, because we're just seeing, again, just a little bit of real risk start to bleed through. And now there's going to be some cause for concern because all of your volatility products are showing that dollar is amping back up. Bonds, okay? Bonds are going to close basically at their lows. Notes are going to close at their lows. You know, you're facing here, the last thing I'll leave you with, okay? You're facing the possibility of seeing like this week, tomorrow, Friday, yeah, you could see a 5% 10-year. All right, last thing, okay? I know the interest rates were supposed to be the last thing, but last thing, we have a $90 expected move on the week. Right? $90 expected move. What is the actual move at present time? So you're looking at a $90 expected move. We did not tag the upper end or lower edge of the expected move. At this point, we're trading 43.10 in the SPX. The week started right around 43. Let's just round it to 43.70. Or sorry, 43.30. Apologize. Okay. So we'll just round this right here to this 43.30. Okay, we're trading right now 43.11. You've basically sold off by a whopping 20 points this week, right? So we're almost, for the most part, I would call this massively unchanged. Yeah, this is where you want to pay attention with a $90 expected move. Why do you want to pay attention? You got to recognize SPX is big boy gamma risk. You have an AM settlement and a PM settlement. There's huge amounts of open interest in here, which is going to Again, this is going to bleed through to the marketplace. It's a lot of gamma risk. Effectively, what I'm saying is I'm not going to give a directional bias to it because I don't like when people are like, oh, that means, heavy gamma risk over here, heavy gamma risk. Look, it's just a crap load of open interest for both the AM and the PM settlement. And it doesn't matter what you think. I'm telling you, there's a crap load of open interest in here. That, okay, is going to make these S&P futures, okay, Mr. Toad's wild ride on Thursday and Friday. So, geopolitics aside for a second, all right, we start rolling down this hill, things are going to get crazy and crazy in a hurry. We haven't gotten anywhere near the upper or lower edge of the expected move. We don't have to hit it, but it's a high probability we do. That's it for this evening's video. Look, lots of risk in this marketplace, volatility at recent highs. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.